Good morning, good afternoon, good evening, whenever you are watching this week's video. Y'all, it was supposed to be out Wednesday. It's coming out Thursday. Y'all, I I don't even know what to say. Y'all probably like, did she freeze? Is she stroking out? No, she's not stroking out, praise God. Um, I enjoyed Friday into the holiday weekend. Both of my sons graduated. My oldest sons graduated. I have three sons. My oldest son graduated from college. My second oldest son graduated from high school. And then I kind of just basked in it because there was a lot going on Friday. And then we kind of just chilled. Why? Because the eighth grade girl, the sole girl in the house of the kids, is getting ready for her eighth grade formal and all these activities. So we had to go run, and after we got eyes off of the older two, put our eyes on her and get things together, leaving that soul baby boy that's in elementary school there to go. So it's a lot of activities. Um, and then I think on Monday I was tired. I sat there and realized, like, we planned this out a year ago, how we were going to get through things, and we haven't even done the celebrations yet, right? How we were going to get to this day and weekend, and how stuff was going to move as we got closer to the deadlines and realized what was going on and how it all worked together. I'm going somewhere with this, y'all, and I'm not going to get emotional. But I stress this because there's some things that I am realizing is going on. I've talked about personal financial statements in the past, but I really don't know if I've ever and I thought I did a good job of taking it through, but I'm realizing the more and more I talk to people and the way we're doing things, that there's certain things that we have not done a great job of understanding how financial statements work. And so I kind of want to take some of the mystery out of it so y'all can understand what goes where. And I got two examples that I want to use this week. Why? Because I realized that understanding how to read stuff, right? So, like, for instance, I'm gonna give an example. When we go to the doctor and we're looking at the scribbles and don't know what the prescription is and saying, wait a minute, what's the diagnosis? And then we're like, well, give me the terms so I can go back and I can go do some research, right? Because some of us are different. Some of us take what the doctor say at face value and be like, the doctor say this is the diagnosis, I don't need nothing, I'm just gonna go with whatever they say. And then some of us are like, give me some information, let me sit on it and let me absorb it so that I can go do my due diligence, research it, and make sure that I can come back and ask informed questions. I created Total Tax Experience in the way that I have changed it, whereas videos and things of that nature, because I love working with people that I can give them information that they could go take, go do the research, come back and have a good discourse with me. Why? Because you don't know what you don't know. And every industry does stuff differently, and every industry's breakdown for stuff and language is different. And because I know this, if you actually understand the main pieces, then you are empowered to come back and have a good dialogue with me. And for the things that I don't know, I'm not afraid to tell you. I don't know. I got to go do some research on that so I can break this down in a way that's palatable so that we can all understand it. Most cases, that will be either in food or shoes, because that's my thing. Those are my jams. Okay? But I'll find an analogy or a way for you to be able to absorb it so that you can relate it to something. And now that you know, you can hold on to that and apply it accordingly. And so that's what we're going to do with financial statements. We're going to actually go into a QuickBooks sample company. We're going to look at the financial statements that exist. The main two, right, are profit and loss and balance sheet. But there is a third one that I'm going to show you, because then we're going to jump over to Apple. Why? Because Apple's in the news, because at the time of this recording, our president of the United States going to town and going to battle with EU, and it impacted Apple stock. For those of y'all who don't know, I was like, what? I thought we was out the water for 90 days because we wasn't having the T wars. But then it got some issues, and then they came back and stuff has cooled off just a tad bit, but I don't know how long, because he might not drink milk at night and go to sleep, and something else might be up on the social medias. So I'm going to relate it to how I need you all to relate this to your businesses. And y'all, If you are a business, if you are not a business owner, I need you to understand your household is a business. It is a business, and your household does have financial statements. Just because you don't write them out this way does not mean they don't exist. We all have a cash flow statement. We all have a balance sheet. We all have a profit and loss statement, whether we present them in this manner or not. We have personal ones. We have ones for our business and companies that we want to invest in that have to actually report to the SEC. Got to tell us their business. So I want you to see the difference between the two, this sample company and what's going on in the stock exchange. And I hope it encourages you to go find a template to go put it to your household, because then you'll be like, because in reality, y'all want to know the truth? That tax return is a profit and loss statement. It's a reconciliation of a profit and loss statement. That's all it is. Bingo! All right, so let's go and let's jump into this lesson. All right, so you should see this profit and loss that came up on the screen. And what you'll see, hopefully it's big enough and not too, like, hopefully, there we go. When it comes up, it's not like too crazy. But you'll notice that we have income, right? And it's broken out. In this case, income is broken out into certain categories, right? Then you'll have the different services that were given under income, labor that was associated to that, what's our total income, services, etc. Total income, in this case, just happened to be $10,200. Then we have cost of goods sold. Not every company happens to use cost of goods sold. Some do, some don't. But it's to get us down to what our gross profit is. All right, so this is before we start deducting expenses, y'all. Before we go in, and let y'all see my face, because this is the mistake I think a lot of people make. When we're looking at our ATM or we're going on our bank app and we watching stuff inflow and outflow of our company or of our personal bank accounts or even our business bank accounts, we automatically think that means that it's an expense. Everything ain't an expense. It just means there's an inflow and an outflow of the account. Money that comes in, that gets deposited, whether you put it in or somebody pays you for some services, that's an inflow into the business, right? But how they show up on a financial statement are totally different. So money for services, goods, things that you get, that's revenue that shows up on your income statement that we happen to be looking at now. And money that goes out for certain things, be it a loan payment, gets split. Some of it ends up on a profit and loss, and some of it ends up on a balance sheet. Okay? That's why I wanted to kind of break it down to this manner. All right, so now we're looking at expenses. Some expense categories, and I can't give you everything. What did I tell you? An expense for a business is, an expense for a business is, according to the IRS regulations, anything that is ordinary and or necessary to the operation of that business activity. Do with it what you will. Ordinary and or necessary for your business activity. Not mine. What I do in my business may not be what you do in your business. Ordinary and or necessary. All right. Expenses. So this landscape business, had some automobile expenses. They had some equipment rental. They had insurance. They had legal and professional expenses. They had maintenance, repair, meals and entertainment, office expenses, utilities, and then they had some other income. All right. And then this right here, net income, this is profit, right? If it's positive, it's a profit. If it's negative, it's a loss. So that's when they talk about if you're operating in the red or the black, that's what we mean. If you're in the red, it's a loss. If you're in the black, right, it's a profit. All right, so now we did that one. Let's go over to Apple. Let's compare apples to oranges. Ha 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 ha. Y'all don't do it. And I'm gonna do it on the annual. I'm gonna see if I can make it a little bit. Can I make it a little bit bigger? Can I zoom in even more? Does that work? I don't know if I can. There we go. All right, there we go. All right, so when we're looking at this, you'll see that Apple has revenue, and this is, we did annual, so we're comparing year over year. Annual, so they got net sales. They have cost of their revenue. It's equivalent to like our cost of goods sold if we broke it out, right? So because that still gives us gross profit. And I'm like, why is she playing with this thing like this? Let me go over here and do it on this side. Oh, because it's 100%. There we go. Let's back out here. Come on. Down, 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 down. Down, senor. There we go. Can y'all see that? It's me playing on the screen. When I be fixing stuff over here. Hold on. Let me fix the screen. And then let me come back over here so y'all can see it. Because I'm on CNBC, y'all. There we go. All right. So now we're going to scroll up. And then you'll start to see the expenses that Apple has. Right? Research and development expenses. I need to know this, right? Research and development expense, interest expense, operating, all these things impact operating income, right? Then we have interest expense, interest income, net income before taxes, provisions. If you want to get into the details, go to the SEC report to see what actually breaks these things down. We got depreciation. Just saw depreciation on the screen. Yeah, depreciation, amortization right now is nothing there. Tax on extraordinary items. And then these are the things after. So this is our net income, and then we have these other accounts, earnings per share, etc., because they're a corporation. All right, so you'll see that they also have revenue, and then they have their expenses, selling general administrative expenses afterwards to get them to whether or not, right, they have a profit or not. And Apple's been pretty consistent with their profit. All right, so we're gonna go in reverse just because I'm here. Let's go to the other balance sheet. Let's go to the other financial statement, balance sheet. All right, let's go up. Now, balance sheet gives us a snapshot in time. A lot of times when you go to the bank, this is what's giving you. Here. It's just not doing anything. A lot of times when you go to the bank, you're gonna get they're gonna ask for a personal financial statement. And when they ask for the personal financial statement, it really is this right here. It's a balance sheet. They ask you about your assets versus your liabilities and any equity that you have. Okay, so you'll see that assets that Apple happens to have is cash and short-term investments, accounts receivable, that's money that somebody owes to them. They got inventory, right? They don't have any that's showing up now. Any prepaid expenses and other current assets. Then they have property, plant, and equipment, which was one of my favorite line items when I was auditing, right? And I was doing financial statements. Pretty cool line item. They got buildings, they have land, they have machinery, they have equipment, right? Then they got depreciation. That's our phantom asset, right? Then they also have goodwill and intangibles that show up on the financial statements. Then they got long-term investments. Y'all, these companies be investing in other companies. You can see the breakout when you go to the 10K. Just figure out what's going on and see what they in and what they, not just they stuff, but they'll go and buy investments for other companies. I'm going to let that sit for a minute. All right. And then they have other long-term assets. Then they have liabilities. So assets, the formula actually is assets equals liabilities plus shareholders or owners' equity or equity period. Okay. And so from there, they have accounts payable under liabilities, accounts payable. This is money they owe to people. So we got accounts receivable, which is the money that is owed to them. And then we got accounts payable, which is money that is owed to others. Two different categories. Okay. And then we have long-term debt. Sometimes you'll have current liabilities, short-term debt. That'll be credit cards and notes payable. And then you have shareholders' equity. Now, this is a publicly traded company. This is why I'm going to show you what it looks like on the for the landscape and sample company, so you can get an idea of what it looks like. But this is, they have stock. What's the value of stock? What's outstanding? Any retained earnings that they have, and other equity. So these two line items, shareholders equity, liabilities plus shareholders equity, have got to equal total assets. So the total amount for liabilities and shareholders equity, y'all can't see that. I'm sorry. I see it. Total amount of liabilities and shareholders equity is going to equate to total assets. They got to match. That's why it's called a balance sheet. I'm going to get my sound thing. This is why Alistair is here, because I need all the help, because my sound effects would be bomb if I wasn't making them all the time with my freaking mouth. Okay? Pause. And now, let's back out of this a little bit. Now we back to Craig's balance sheet, and we just did it as of today when I'm recording a video, right? But I'll do it on the annual. No, let's leave it this year to date. Let's leave it this year to date, and it's on an accrual basis. All right, so let's look at this. For this company, they also have assets, checking, savings accounts, accounts receivable, where somebody owed them some money. They also have inventory and undeposited funds and things. That's a QuickBooks account thing, right? Money that's sitting there waiting to be deposited in the bank account. Then they have their assets, trucks and things of that need to be depreciated. Notice that's $23,000. Then we have liabilities. They also have accounts payable, money that is owed that they owe to other people, right? So receivables, money that you're supposed to get in, payables, money you owe to other people's. Yeah, I did say people's. Then we have credit cards and other current liabilities, where they might have payroll liabilities. They got a loan payable. They have registration and fees. And then they have long-term liabilities. So we have current liabilities, that's under a year normally. And then long-term liabilities are a year and more, a day and more, right? So under a year is current. Longer than that is going to be long-term. And that's going to be the same thing when it comes to assets. We have current versus long-term. And then we have our equity section. Opening balance equity is something that happens in QuickBooks, right? Retained earnings, meaning that we'll take our profit and everything and offset it and carry it forward into the next year. And then our net income, remember we saw this when we looked at our P&L, $1,942.46. That comes over to our balance sheet. That's the only thing that comes over from our balance sheet. So you'll notice that sometimes you're like, man, I'm making payments for a loan. Well, it's going to be split between principal and interest. The principal is going to reduce this amount. The interest is going to go on the P&L or the income statement. All of it is not an expense. And that's really what I want to show people. Like, you have to understand this. Now, notice you're not going to see a lot of negative numbers here. You see negative numbers over here in the equity section, right? But elsewhere, you're not seeing negative numbers, because the normal balance, or how we end up being positive, you'll see a negative for depreciation if we were doing depreciation when it comes to the asset section. But these are positive numbers because they have what we call a normal balance, which is a whole lesson for another day. And I'm not trying to make y'all accountants. All right. And then we'll hop back over to, there's one more financial statement. Did it click over? I did not click over. Yes, it did. There's one more financial statement that y'all see here, cash flow statement. And the reason why I want to show you this statement is because what you'll see is the only line that comes over from the income statement, yet again, is the net income. Go look it up yourself. Most of these items that we're looking at, we saw these things: depreciation, amortization, non-cash items, capital expenditures, other investing. A lot of this stuff is coming from the balance sheet. These line items, what? Short-term debt, long-term debt. You saw that, right? Cash dividends, common stock. That was on the balance sheet. That was not on the P&L or the income statement. And so, hold on, y'all. just me talking and trying to do tech. Y'all know how I get when I be trying to do tech. And it don't be working in my favor. Hold on. And so, y'all, I know y'all probably like, huh? Why did she get all technical on us? It's because it's time for us to go back and say, I know I mentioned personal financial statements before, but I need y'all to understand, and this is why I use Apple, that before you make an investment in anybody else's company, you should look at what their financial position happens to be. And I went on cnbc.com for free. It's not even a paid subscription because the financial statements are sitting there to give you an idea of, well, what's going on with their money. Are they profitable? Have they been profitable year over year? Are they bringing in more revenue? What's going on? If you are investing, you are making that type of decision. You are actually looking at who's in charge of their company, how much money they're making. Can I get an idea of how much people are getting paid, etc.? What are the officers getting paid? Who's on the board? Have they filed their 10K reports? What's going on? Let me see if I can go listen in and see from their earnings calls what's happening. We do those things to make sure, or we should be, let me say that, we should be doing those things before we ever get in bed with somebody. Not just because we go to their store or we buy their product. Right? But in this day and age, we can do a lot of research to figure out what they stand for. Or you'll find yourself in a situation like my friend who got rid of their DEI that I love them and they have a red symbol, red and white symbol. Because I'm not gonna throw no shade at them because I feel some kind of way because I miss you. I do. However, decisions that people make a difference. And so I say that because we need to start, as we head into June, looking at our own financial statements, be it our personal, be it for a business that we own, and we need to understand what they say and how we read them. Why do we need to understand what they say and how we read them? Because we need to be making decisions off of our numbers, not off of our emotions. Are we keeping something because it makes fiscal sense, not just because it makes us feel good? Now, I'm not saying be boring and tight and get into, you know what I'm saying, your accounting era. I'm not saying that at all. I'm saying that it's time for us, especially with supply chains acting crazy and the T word being thrown out every other day. And stuff changing, that we have to make stuff that is decisions that are non-emotional, that are based in solid facts and information. And the only way we can do that is to go and make sure that we know what our numbers say. So I will tell you that in the month of June coming up, I will be going through the One Big Beautiful Bill because I want us to know what the facts are and how what is being proposed is going to impact us so that we don't get emotional just from snippets that we're seeing on social media, be it TikTok, be it YouTube, be it the news, be it Instagram. Because we'll hear sound bites and get reared up. No, let's take this thing down and base it off of what it says. This is what it means. This is how it could impact us, and start looking at our own financial situations and getting our numbers on paper so that we know how to combat what's coming our way, so that we don't feel like we felt at the beginning of the year. I told y'all, I was in a flux. I was caught off guard. I had to get my footing down. And some of the ways that help us get our footing better is to look at our numbers and figure out where we're going. I am going to because I know I said it on a personal side, like I follow the Budgetista and there's some other tools that you can do. Let's start to get this stuff together. And I want to give you homework assignments as well during the month of June to actually look at this so that you can walk away and you can come back and say, hey, Patrice, when I look at this on my own financial statement, what does this mean? And I hope I am hoping that it gives you the ability to say, wait a minute, I can just go on CNBC and go start looking at these companies' business and maybe it will encourage you, just like Apple has invested in other companies, Microsoft has invested in other companies, the other people have invested in other companies, that you do the same and start investing informed so that you can also build and leverage your future as well. Because, baby, the stuff that be thrown out on Twitter, and I don't even got a whole Twitter account. Buy now, sell now, watch out now. That's all I'm going to say. Until next week when we do our newsletter for you. And then after that, we jumping into that bill. Unless one of y'all come and say, Patrice, before you jump into that bill, can you break this thing down? All right? I appreciate you all. And from me and the rest of the TTE team, we truly do thank you. As the tax cop says, we are truly here to help us, help you, help yourself. Till next week. Peace.